Well, as the world marked the 10th anniversary of the collapse of Lehman Brothers and the start of the global financial crisis of 2008, a new crisis emerged in India. Infrastructure finance company il&fs defaulted on payments to its lenders and triggered a panic in the Indian financial markets. cnbc TV 18's Timsi Jaipuria and Yash Jain recount the fallout.
The 1st of October 2018 will not be soon forgotten by anyone tracking the Indian financial markets. On that day, the Ministry of Corporate Affairs moved the NCLT, seeking to supersede the Board of Infrastructure Leasing and Financial Services, or the il&fs Group, one of the most trusted names in the financial services and infrastructure space.
The Corporate Affairs Ministry's move took many by surprise, but it was not a decision taken overnight. The trouble for il&fs began almost a month earlier on 4th of September when it came to light that il&fs had defaulted on a short-term loan of 1,000 crore rupees taken from SIDBI. At the same time, a subsidiary of il&fs also defaulted on a 500 crore rupee loan taken from the Development Finance Company.
This sent shockwaves through mutual fund houses and brokerages, which cumulatively held il&fs bonds worth over 11 lakh crore rupees. Shockwaves because il&fs enjoyed a credit rating of AA+. Ratings agencies jumped to correct their assessments. Pointed out that apart from the liquidity pressure the company was facing, it was also laboring under a debt burden that had doubled in the last 4 years between 2014 and 2018 and stood in excess of 91,000 crore rupees. Over 57,000 crores of this was owed to public sector banks. il&fs and its subsidiaries continued to rack up defaults both on debt and interest payments, and the il&fs Group went into emergency damage control mode.
Only way in which we can actually honorably and in a transparent fashion repay our creditors is to be able to sell our assets in a calibrated, orderly fashion. And that's our focus. The intrinsic value of these assets has to now be discovered through a very calibrated, orderly asset monetization plan. We feel confident, based on the kind of assets we have created, that we should be able to service much of the creditors that we have taken money from to build these assets. So that's the real plan. The plan is to create an asset monetization plan that results in unleashing value and cash flow to repay creditors.
The government, however, was not waiting to see how that plan played out. Armed with an order to supersede the il&fs board, it nominated a brand new 6-member board led by Uday Kotak, who was elected chairman. Members included Vineet Nair of Tech Mahindra, who was named vice chairman and managing director, former SEBI chairman G.N. Bajpai, former ICICI Bank chairman G.C. Chaturvedi, and former IAS officers Malini Shankar and Nanda Kishore. This board promised quick action on reassessing the group's assets and liabilities that would then form the basis of a revival plan.
Each of us as directors are humbled by the responsibility placed by the government on us, and we truly consider this as a national duty. With a view to preserve value, the board will take necessary steps with respect to the company and its subsidiaries, joint ventures and associates. The board was made aware that there are 348 entities as a part of the group. 348 entities as a part of the group, significantly larger than what we had originally been aware of. And this underscores the task at hand.
It is quite possible that some of the units of il&fs can actually be sold as going concerns.
Okay.
But that may be a few.
Okay.
In many cases it could be an asset sale, in some cases it could be a slump sale,
Right.
and in some cases it could be just winding up.
The MCA meanwhile ordered the SFIO to see if any fraud had been committed at the il&fs group. On the 3rd of December, the SFIO's interim report to NCLT alleged that il&fs executives, including former chairman Ravi Parthasarathi, window-dressed financials.
The problem did not end with il&fs books. Defaults by il&fs and its various group companies led to a massive sell-off in the shares of various housing finance as well as non-banking financial companies, opening doors to a major crisis in the Indian banking system and creating ripple effects through the Indian economy. Now, as the calendar year turns to 2019, the new management at the il&fs group will have the task to draw out a resolution plan for the group, but the going looks tough as it still struggles to assess the assets and liabilities of the group. As far as the old management is concerned, they have a long legal case to look forward to, provided the SFIO or the Serious Frauds Investigation Office puts forth a strong case against them.
Panic that took place in the financial space via il&fs. There is some panic in our markets as well, some bit of stability coming in.